All right, guys, welcome back to the YouTube channel. We're covering episode 3 of the NASDAQ mini series. We're going to be covering the scalping model, which I call the BLITZ model. This is the personal model I use for my trading, especially when I'm scalping. Okay, so I promise you guys, if you guys just stick with this and what I teach you in this video, you do not need anything else. This is the missing piece to the puzzle. So what are we going to cover in this video? We're going to cover aligning ourselves with the institutional order flow top down, AM and PM session characteristics, and I'll show you a few examples of this, H4 candle distribution, what to look for in a H4 candle distribution, what time to focus on our trades, different types of draws on liquidity we're going to be looking at, higher time frame SMT to lower time frame SMT, a lower time frame change in the state of delivery, and a lower time frame double purge. Okay, first things first, we want to align ourselves with the distribution top down. Ideally, you want to be in a weekly, daily, and 4-hour buy program when we're going to be executing a buy, right? Same thing goes for a sell, right? We would like to be in a weekly, daily, and 4-hour before executing a sell, right? This gives you the highest probability framework of a trade playing out, right? Because we're aligning the time frames top down from the higher time frame to the lower time frame. So you can see I've put in brackets here that advanced traders won't always require this. So the reason for this is we can always catch counter trend plays with the 4-hour candle, right? And the objective of a scalper is to trade one single 4-hour candle, and we can do that against the higher time frame order flow for a counter trend move. Now, counter trend trading, you want to leave that to when you're slightly more advanced, and you want to focus on the higher time frame institutional order flow for the time being. Okay, so when do we avoid the AM session? When Asia expands and London expands without a retracement into Asia's range, skip the AM session. It's likely to be choppy, up and down movement without a clear one-sided move. And then you want to focus on the PM session. Okay. When London's range is also extremely large on its own, you also want to skip the AM session and you want to focus on the PM session. Okay, so here's an example of when London and Asia's range is extremely large. As you can see in this move here, you see London and Asia, you had this massive move down. Yeah, this is huge. What ends up happening in New York is you end up seeing a chop fest, right? This is 8 to 11, right? So just by looking at the previous session's price action, you can determine the next session's characteristic, right? And because we have a choppy AM session here, we then see around midday, drop down below, and then we see a bullish move higher here, and then we break structure and we have a dealing range to work with from this low to this high. We then have a discount for value gap, really easy here, and then we see the PM session ends up being the expansion here, and we know this beforehand around the AM session because of the price action within London and Asia. Okay, here's an example of when New York session is ideal. You have Asia, the Asian range setting the low of the day here, right? Running out the sell stops here. Then you have London trading back into Asia's range and expanding, right? We also get a retracement here and an expansion, all within London's range. Notice, even though Asia has set the low and London has been an expansion, there is no massive move away, right? We've also not cleared the drawn liquidity. So without that overextension in Asia and London seeing a retracement in, we can anticipate a clean New York AM session. Okay, and you can see New York then just drops down below relative equal lows, and then you see it expand higher. Okay, here's an example of London setting the low of the day. So the sell stops here with the order block. London trades down lower here after a Asian session consolidation, and then we see a change in the state of delivery here. No massive move in London, and the buy stops drawn liquidity still present. We can expect the AM session to be a continuation and to see an expansion. Last example here, the same thing here. We're in the discount of this range here. We have clear relative equal highs above us. The market then trades below sell side liquidity here, gives us a change in the state of delivery without any massive expansion or overextension in London. We can expect an AM session continuation to be pretty clean, which you see here. There's a 15-minute fair value gap with the breaker here, unicorn model, expansion to the buy side liquidity above here. Okay, H4 distribution candle. Now, this is going to be the most important section of this video, okay? And as I mentioned in the beginning of this video, this is your primary objective as a scalper, okay? All you need is that 1 4-hour candle. So I get the question all the time, well, MMXM, what am I trying to do, right? What am I going into the charts analyzing to try to do as a scalper? All you're trying to do is determine whether the very next H4 candle is going to be a distribution candle. When I say very next, I mean that, right? I'm not talking about 2, 3, 4-hour candles into the future. I mean the very next H4 candle is all you need to determine to be a scalper. That is it. There's nothing else. Just the very next candle. Once you can determine that, and I'm going to teach you guys a few different ways to determine a distribution candle on the 4-hour, that is 90% of the work done. The hard part is done once you have that. Everything else becomes very easy when you can do this right here. Okay, so what do we need to focus on to determine that the very next H4 candle is likely to be distribution? First, ideally, we would like to be trading in the higher time frame institutional order flow in that direction. We want to be using premium and discount, so a dealing range to work with. Key levels on the higher time frame to key off our trades from. Liquidity, seeing buy side or sell side getting run when we're bullish or bearish. And lastly, when you have this framework here, the thing that's going to tip its hand to you for the very next H4 candle is going to be the candle closures that we see on the 4-hour chart. Okay, so this is one of the formations here. You guys should know this. I've taught this in my second course and it's out there by now. So candle closures are extremely important. I've covered this before. When we wick candles and close within with the framework of premium and discount, high time frame key levels, etc., that is indicating that the market likely wants to trade higher. So when we get that close within here on that second candle, the third candle is likely to be a distribution candle. Okay, so this is the first way you want to look at the very next 4-hour. And this is a 4-hour chart, right? This is what it would look like on a lower time frame. So here's the second formation that we can use. And again, I've taught this in course 1. When a swing low forms. So when a swing low forms and the third candle that makes up the swing low closes above the second candle, you can anticipate distribution in the fourth candle as long as the drawn liquidity isn't met. Okay, and this right here is a 4-hour chart again, and this is what it would look like on a lower time frame. Just this one candle is this right here, and this is what we want to participate in. Okay, lastly, and this is the third example I'm going to share with you guys. It's when we wick below a candle here, or if there's SMT here and we close above the previous candle body's high after we've traded into sell side liquidity or a high time frame key level. That's a change in the state of delivery. We can anticipate the third candle to trade down into the opening price of the order block and then see an expansion candle for that 4-hour, and it would look like this. Okay, we're gonna cover a call out I gave here, which is just recent price action. I'm not going in there cherry picking an example for this model to show you guys, oh, look how this works. No, this is from 9th of June. That's Monday of this trading week. This was what I was looking at here to run the previous weekly high. We traded down into this 4-hour key level, and I sent this out to my group that we'd be looking for a continuation as long as the closure is there. So notice, even when I'm doing my own analysis, that proper closure, which is one of the criteria I gave you guys to determine the next 4-hour candle distribution, I'm looking at that. Okay, here's the higher time frame framework I was working with at the start of the week. Okay, the market is clearly bullish. We're expecting down close candles. There's a high time frame drawn liquidity above us here with the daily fair value gap. That's where we want to see the market draw to. So on a daily chart, we're in a bullish program. On a weekly chart, we are as well. We then see the market on Friday trade down below a previous daily low. When we're bullish, we trade below sell stops, and then we see a hard rejection here. So it's reasonable to expect going into Monday, remember the close above the down close candle here, this is an order block now, to anticipate the daily candle to be a distribution candle, right? So the daily is in a buy program. Now, with that daily being in a buy program, we're looking at the previous weekly high here, and the market trades back down into a 4-hour fair value gap here. So notice as the market trades down here, and this is a 4-hour chart, as we trade down into this 4-hour fair value gap, we run the previous 4-hour candles low, and do we close within here? Yes. Okay. So it's reasonable to expect the next 4-hour candle to be distribution. Okay. Key level, drawn liquidity still present. Now, in the third candle, when the swing low has formed and the third candle has closed, do we close above the second candle's high? Yes. Has the draw and liquidity been met? No. So we can anticipate that the fourth candle to be distribution as well. Okay. And like I said, once you can figure this out and the candle closures with high time frame key levels, liquidity, order flow, it's tipping its hand to you whether the next candle is going to be distribution, and all you care about is that very next candle. We don't care about this second or third or three or four candles into the future. It's literally just the very next candle. That's all we care about as a scalper. So we're going to focus on this candle here and this candle here, right? Because they both fit the model for a 4-hour distribution. Okay, so we're going to start off by looking at this 4-hour candle, just this right here. We're going to be looking at those 4 hours. Okay, and in those 4 hours, what are we looking for? We're only looking for 3 specific things to form, okay, within those 4 hours, okay, not before, within them. Inside of those 4 hours, you either want to see a previous 1-hour candle's low get run, okay? One of those candles on the 1-hour chart within that 4-hour candle is going to run a previous candle's low, okay? The second is going to be an M15 swing low or M15 swing high getting run within those 4 hours. And lastly, an M15 FVG being formed within those 4 hours. So here's what it would look like when we're looking at that first example, which is seeing a 1-hour candle run a previous candle's low inside of the 4-hour. So if we're anticipating this 4-hour candle to be distribution, for this model, you want to see one of those 4 candles on the hourly chart that make up a 4-hour candle run one of the previous candles low on the hourly chart, right? That sets a stage for offset reaccumulation to go long. Okay, so that's the first formation. The second formation is going to be a 15-minute stop hunt inside of the 4-hour candle. So if this is the 4-hour candle we're trading, within these 4 hours on a 15-minute chart, we want to see a swing low get run. Okay, that's the second option. And lastly, the third option is within that 4-hour distribution candle, do we trade down into a 15-minute fair value gap or form a 15-minute fair value gap and trade into it? Okay, that's it. Those are the only 3 things you're looking for inside of that 4-hour distribution candle. Okay, I'm just going to remind you guys here what we're looking at. We're at this key level. The market is overall bullish. We've traded into this key level. We've closed within here. So we're looking for the next 4-hour candle to be distribution. And we still have the previous day's high and previous week's highs drawn liquidity still available to us. Okay, so we're going to go into just these 4 hours, right? Because that's all we care about is this very next 4-hour candle. Okay, so here is the 4-hour candle, okay, and the framework behind it on a lower time frame. This is a 15-minute chart. So what were the 3 options I gave you guys that we want to see within these 4-hour candles to set the stage for a buy? Right? It was either first a previous hourly candle low run, a M15 swing low run for bullish, or an M15 for value gap. Do any of those 3 form here? Yes, we see M15 for value gap form within that 4-hour distribution candle. This right here sets the stage for longs, where to buy stops resting above here, range low to high, or an obvious drawn liquidity like this new week opening gap here. Okay, so that's what we're looking at here in this 4-hour distribution candle. Now, what else do you want to see is that higher time frame SMT, which we get right here. Okay, so that higher time frame SMT and the change in the state of delivery here sets the stage for this 15-minute fair value gap within this 4 hours to hold. Here is that SMT. Okay, this is ES. Let's go back to NASDAQ. You can see NASDAQ makes a higher low and ES makes a lower low here. Okay, so what is the lower time frame checklist? Now the market's traded into that 15-minute fair value gap. It's formed within that 4-hour window that we're expecting to be a distribution candle. This is what we need to check off. We need to be in the correct time. We need to have an obvious draw on liquidity. And when I say obvious, I mean obvious. So if you look at the chart on the lower time frame and you have to think about whether is this really a liquidity pool, is this really relative equal highs or lows, that's not obvious. I mean, it has to be so obvious that you don't second guess it. Immediately you see that liquidity pool and you're like, oh, okay, this is relative equal highs or lows. This is so obvious. The third is a lower time frame SMT. The fourth is going to be a lower time frame double purge and or liquidity run, and a lower time frame change in the state of delivery. Okay, so what time are we focusing on for this model? We're going to be looking at the London session between 3 and 4 a.m. So the silver bullet. We're going to be looking at New York AM session between 9:45 and 11 a.m. I like to let the first 15 minutes of the market open pass, so that's why 9:45. Lastly, during the PM session, and you guys know the characteristics of when to trade this and skip the AM session, we're looking at 1:30 p.m. to 3:45 p.m. in the afternoon. Okay, so what lower time frame draws on liquidity are we looking for? Relative equal highs. Okay, this is the first thing you want to be looking at. And you want those relative equal highs or lows to be so obvious you can't second guess it. Previous session, day, week highs and lows, range highs and lows. And the main focus is going to be these three, okay? Especially when you're starting out. And the fourth option is going to be data highs and lows. If you're unaware of what this is, I'll cover this in a later video. And a new week opening gap. Okay, so let's remind ourselves, we're trading down into that 15-minute fair value gap in a 4-hour distribution candle after trading into a high time frame key level, and we've got that candle closure, which confirms this likely to be a 4-hour distribution candle. Okay, so we have our lower time frame checklist here, and this is what we want to be looking at when we trade into that 15-minute fair value gap in this case. First is time, right? So are we in a key time that I mentioned? Yes, this is 3 to 4 a.m., that silver bullet time window. And keep in mind, guys, this is not cherry-picked examples. This is literally Monday's price action. Obvious draw on liquidity. Do we see any obvious relative equal highs, lows? We also have that new week opening gap. But look at these highs right here. Is this not obvious? This high, and this high. That is an obvious draw on liquidity. You're not second guessing whether this is relative equal highs. So the relative equal highs right there. Lower time frame SMT with this low right here. You can see this candle does not take this candle's low here. This is ES. You can see that clear SMT. Back to NQ. And then we're looking for a lower time frame double purge and or liquidity run. In this case, we get a double purge where we take the buy stops of this range here first, and then we accumulate the sell stops. Now, we don't always have to have a double purge because sometimes you're going to have it on the 15-minute chart. And when you have it on a 15-minute chart, you don't need it on a lower time frame. However, having a double purge on the lower time frame is going to increase the probabilities. Okay, so we get that as well here. And then lastly, we need to see a change in the state of delivery. Okay, so if we look at these 3 down close candles that trade into the liquidity, this is where your change in the state of delivery happens right here. Why? Because we're looking at the bodies here. The collection of down close candles, because they're together, right? One after the other, as they trade into the liquidity pool here and the key level. The bodies right there is where the market actually changes its state of delivery. So when the bodies right here get closed through by another candle's bodies, that's when the market changes its state of delivery from bearish to bullish here. You can see that right there. Market then also has a 1-minute fair value gap there, trade down into it, and that is the Blitz model there with the 15-minute FVG. Okay, looking at the next example here, which is, remember, we just covered this 4-hour candle, which was with that 15-minute FVG. We also have a swing low formed here, high time frame key level here. Previous week high and previous day high still isn't taken at this point here. So with this swing low formed and the third candle closing above the second candle, it's reasonable to expect now that the fourth candle is going to be a distribution candle. right? And all we care about is those 4 hours of this one candle. That's it. Okay, so here is that 4-hour candle between here and here. Those are those 4 hours where that previous day has the draw on liquidity. So 3 options here. Previous hourly candle run, a M15 stop run, or an M15 FVG, which we just covered. Do we see any of these 3 inside of this 4-hour window? Yes, we see the market run the 15-minute stops. Okay. We also see this be extremely high probability because there's a double purge. Now you don't need this, okay, but it increases probabilities. But this is what we're looking at here. All we need is that 15-minute stop run to set the stage for smart money to accumulate longs below retail support, right? So the market goes below here. We have this inside a 4-hour candle that's meant to be distribution. And then we see the market run higher, right? So now let's look at the lower time frame checklist and let's go through it here. So first is time. Okay, we can see that clearly here. I mentioned 9:45. You want to let that first 15 minutes of market open pass. This is 9:45. Okay, I'm not going to remove this because it's a bit distracting, but you can see the time begins from this candle here. This bearish candle here starts our time window for looking for a trade. Do we have an obvious draw on liquidity? Yeah, you don't have to second guess this. Relative equal highs here. This is as obvious as it gets right here. Okay, so there's your buy side liquidity there. Do we then have lower time frame SMT? We do have an SMT here, okay, in YM, and an SMT here with the ES. Okay. Okay, so after we get that SMT on the lower time frame, we're then looking for a liquidity run or double purge on the lower time frame. If we look at the 15-minute chart, we had that double purge on the 15 minutes, so we don't need to see it on the 1 minute. However, if we go to a 1-minute chart, you can see this swing low gets run here, okay? And then do we get a change in the state of delivery? The down close candle that goes into that 15-minute stop run right here, we see the bodies get closed above here with these up close candles bodies. Right there, does the market change its state of delivery from bearish to bullish? Okay, we also get a 1 minute fair value gap to frame our trade off of. And that right there is a long to go higher. And that's the BLITZ model with an M15 stop run. Okay, we're going to be covering now the move to the previous weekly high here. Okay, new week opening gap gets traded back down into after running out the previous day's high. But we do still have our drawn liquidity present, which is that previous weekly high. Okay, so we can see the market here trade down into this. We then get an immediate rebalance of this candle. That's a bit advanced, but we also see we trade into this higher time frame key level and we trade away. Okay, we can expect the next 4-hour candle to be a distribution. There's also SMT here. Okay, so with this in mind, all we care about is this one 4-hour candle for our scalping. That's it. We don't care about anything else. So within these 4 hours right here, what are we looking for? One of those 3 options. So we have a hourly previous candle low or high run, a M15 stop run, or an M15 FVG. Do we get any of those 3 here? Yes, we do, right? We get that previous H1 candle run right there. Keep in mind, this is within those 4 hours that we're expecting to be distribution. That is critical. This is not before, this is not after. It is within those 4 hours. We also get that higher time frame SMT here. You can see that right there. That's why this is ES. You can see right there. NASDAQ takes the low, right? So you have that higher time frame SMT and the previous hourly candle low run. So what are we looking for here? We're looking for our low time frame checklist. First time, this is the start of the Asian session. And yes, I didn't mention the Asian session before, but this right here is the Asian session kill zone when you have a specific criteria here. And I will be dropping another video on when the Asian session is high probability on NASDAQ. So you can add that into your trading when you see that scenario, right? Which is what we get here. Next, do we have an obvious draw on liquidity, right? So if we zoom out, we have, look at these highs right here. Like when I said obvious, guys, this is what I meant. You're not second guessing this. You're looking at the chart and you're like, this is really obvious as relative equal highs and where the market should trade up to. Next, we're looking for lower time frame SMT, which we get right here with this swing low right there. That's ES right there. It's also a double purge on ES. Okay. We then look for a lower time frame change in the state of delivery. So remember, the previous hourly candle H1 candle run, the down close candles that trade into that liquidity pool right there, when the bodies get closed above by bodies right there, that's when the market changes its state of delivery from bearish to bullish right there. You can then look for longs, and we can see the breaker unicorn model holding right there after the change in the state of delivery. Okay, so this would be the fourth formation of the BLITZ model. Okay, so very clear framework here, and you have three different options within the 4-hour distribution candle to look for a trade. And if you guys stick with this, like I said, you do not need anything else. Okay. So if you guys watched the last episodes, you saw I gave this call out, this higher time frame call out on NASDAQ, which is from this low to this high here. Okay. There was also a continuation within this range still from this low, from this volume imbalance to the high as a continuation. I also gave that out. I want you guys to study that. And this is homework. And you're going to be looking at this move here, then the retracement here, and the longs again here to the buy side liquidity. And can you see the BLITZ model here? Just one of those formations for the BLITZ model. Can you find a 4-hour distribution candle? And do any of those three formations form within that 4-hour candle? Okay, here is a second piece of homework, which is going to be another call out I gave here, which was this 15-minute fair value gap. I wanted to see the market trade down into there and then see a pump to the relative equal highs here on the buy side liquidity. That's this right here to this high. Same thing. You want to look at this, look at the NASDAQ ES YM. When we trade into this key level here in discount, can we frame a setup using a 4-hour distribution candle? Can we anticipate the 4-hour distribution candle using the different ways of candle closures that I've taught you in this episode? And within those 4 hours, do any of those three formations form? And if it does the lower time frame checklist give you an opportunity to enter a trade? That's what you want to study here. Okay, that concludes this episode. That's the BLITZ model, guys. I've said it twice, but I promise you guys, if you just stick with this, you do not need anything else. This is one of the highest probability models you will ever find out there. In my opinion, it is the highest probability model you will ever have if you trade this on the NASDAQ and E-mini. Okay, with that in mind, thank you guys for tuning in. Like, subscribe, and I'll catch you guys in the next YouTube video.